Probably shouldn't play that during the show.
No, probably not.
Get a bit of a, what do they call that? A copyright strike? Yeah.
Yep. Demonetized.
Hey, welcome to the closing beat, everybody. Happy Wednesday. How's it going out there? Hey, big thanks to Mr. Mathai for sending us a nice little card here, welcoming us to our new office. And I found it kind of funny. Let's see if I can block out their account number and stuff. They sent us a $101 check. You don't have to send us stuff, but I'll assume that's a joke because, you know, we can't accept gifts or give gifts over $100, so that was kind of funny there. But thank you for thinking of us anyways and sending us a card. Really appreciate that. The new office is well in progress, right? We're doing good, right? I love it there. Well, we're financial advisors here to talk about the stock market here today, and got some good stuff for you. We're going to try something a little bit different today, as I often do. We'll look at the stock market and kind of dive through it. Now, yesterday, remember, we sort of shook off the inflation concerns. Everybody's like, oh man, inflation sucks. But we get retail sales out, and it proves that you guys are out there spending money at higher prices. So you're willing to absorb those inflation prices or higher prices at the moment, or you at least can, right? Maybe you don't want to, but you can. And so it proves that even though we're all complaining about inflation, we're willing to spend at higher prices. Simple as that. Now, the stock market, if you look at today, you can see the performance off the right-hand side of your screen there. But the stock market is historically in a weak time statistically as well. We covered this a little bit the other day. If I go over to the charts, this is options expiration week. Wednesday is typically a down day, very normal, nothing too crazy there, nothing to be excited about. I think the market actually fell just about that exact amount today. So everything's pretty much normal there. But if we take a step out and zoom out further, as you know we often like to do, here is the average performance of every single day of the stock market. Right? Going back the last 20 years, how the stock market performed, and the big red arrow here is just to show you that this is kind of the next week that we're in. So today averages a slight decline. You got a slight gain on Thursday there, which actually coincides with how options expiration performs. So there you go, putting some of that data together. Then we go into Friday as being one of the weaker days, the next Monday, of course, being weak. And so even though, you know, it's maybe a little small and you can't see too much there, you can see that we're entering a bit of a weak point historically, or now you would say seasonally. So if you're looking at all of this, seasonally, we're a little bit weak here if you want to sound smart and impressive to your friends. So that's kind of where we're at. And if you see the markets do get a little bit weak, as it kind of felt like they were here today, although we didn't fall much, it's kind of normal, right? I mean, that's to be expected there, so no problem. If we start with the Dow, you've got the Dow pulling back here just a little bit. It's in last place year to date, dragged down today by, Visa, right? So if you look inside of the Dow, your big drag is going to be Visa. They're getting the boot there from Amazon in the UK. I don't have a real good background on that. I don't know enough to say what's going on there, but they're looking to work with MasterCard instead. Visa did sell off pretty hard there. Love the gap down sell-off here today, putting in a nice bottoming tail. So it lets you kind of know that people are shaking off that news rather quickly. And so that one was kind of interesting. And Boeing, I don't know, we pointed out Boeing just recently broke this downtrend here. So you can kind of see it without me drawing the lines. Breaks the downtrend, investors looking to participate in hopefully better prices for Boeing in the future. But the tide is changing, right? The news is changing. The sentiment is changing. The data is changing for them. New orders, actually here, I've got, there you go. So if we look at new orders, which are basically all Boeing in this case, U.S. non-defense aircraft orders, this is basically where we stand. We're back to average, right? So we've got orders picking up here from the COVID decline. We're basically at, I don't know, call it normal. And you can't see, there you go, you can see the dates just so you know where we're coming from there. Basically kind of normal, as I was saying, the tide is turning for the data as well. So good news for them. And then if you look at another data point, unfilled orders, this would be the number of aircraft that have not been delivered. It's another way to look at it. Also, that's starting to perk up, right? So the backlog, so to speak, of planes that have yet to be delivered, well, that's starting to perk up. It's not quite as bad as we've seen in the past, but that's good news if you're looking into Boeing or the Dow and you're looking for that to pick up some of the slack compared to how weak it's been all year. And you know what I realized? This thing is, oh yeah, there it is. See what I'm saying? I like to just kind of get comfortable, hang out with you guys here. My chair was low. Why do I look so short, man? So moving on to, I actually guessed the Dow right now. Give me a second here because I got to do one of these things, and then I have to manually do that today. Have at it.
Got it. We're good. Here we go. Your top 5 for today. We got Patrick, Ron, Silk, Jeff, and Veer. Those are your top 5 today.
Well, yeah, that was easy.
Yeah, that's kind of all I had. Sorry, I didn't have any fluff today.
Maybe we don't need to do it every day. You know, do you guys like seeing the leaderboard every day, or maybe it don't matter?
Like a start off the week and then Thursday.
Yeah, maybe
Monday,
chime
Thursday,
right in there. Let them know how things are going. All right. Well, I'll go ahead and turn that off. And congratulations to those of you in the lead, and good luck to those of you that are close to the first place and stuff. Hope you do well. Can only be one winner. It's a $100 gift card, or you can have your account credited if you'd like. All right, so back to the markets here. You got the S&P also pulling back just a little bit. Slight down day, not too bad there. The NASDAQ is pulling away a little bit year to date in terms of them outperforming, but the S&P doesn't care. She's up 25%. Right? It's like, fine, NASDAQ wants to have 26, they can have it there. No problem. If you're looking inside of it today, Tesla, one of the bigger gainers. And, well, look at that. General Motors, one of the bigger gainers. Why would those two stocks be up when everybody's excited about Rivian, which fell today, is fine, and Lucid also fell a little bit on the day. So why would everybody be excited about that? You want to know what I think on that one? I'm going to cover that here in just a second. You look at Tesla and GM and you go, well, if Rivian is worth that much and they have no sign of any sort of revenue, and Lucid as well, then that means Tesla and GM are cheap, right? If the valuation of those companies is going to remain at those highs, that means Tesla and GM deserve a much higher market cap. So we'll cover that here in just a second. But nonetheless, you got a couple other places in the S&P. Lennar, you got a little bit of a breakout. We talked about this one the other day. It is starting to give you that one. Home builders in general, nice momentum, all looking good there. The ITB is the one that we covered yesterday. Solid, strong, consistent momentum. You like to see that. Hilton right off the 50-day moving average. If you like technical patterns, you like technical locations, you're going to like that one there. And also you might like Marriott. It's the same thing. I mean, it looks the exact same. So if you're looking around for ideas there, well, there you go. You've got oil pulling back under the 50-day. That's more like it, right? Yesterday, I'm like, I don't know. It's not good news for the bulls that want to buy a pullback. Today, we get our more meaningful pullback. I think that's good news there. So I welcome that pullback because you now have Apache pulling back, and it got downgraded today as well. You've got Valero Apache got upgraded. Valero also pulling back, and all of the losers in the S&P, if you were to sort, you're going to find a lot of them like Marathon, Occidental Petroleum. They're all pulling back as well. This is great. This is actually a welcome pullback. You start focusing in on that list for the moment, looking for stocks that you can buy on a pullback. Some of the news that came out, you had oil inventories come out as well, and President Biden's quote to the FTC, his actual words, he'd like for the FTC to further look into what's happening with oil and gas prices. So he wants to actually take a deeper look. Whatever you found before was not good enough. Let's look a little bit deeper. I think everybody kind of knows what's going on there. Anyways, that's the S&P. And did I point out the Russell? So the Russell pullback alert here. It's already working on that pullback. Otherwise, very strong. Showing a lot of momentum here in the short term. You kind of like that one there. Let's talk about Rivian. Rivian, everybody's probably looking at that one. I'm sure it's all over the headlines today. Big pullback, right? Well, first of all, big and unbelievably ridiculous rally, but you got a big pullback here. It was bigger than Ford and General Motors and Volkswagen and Daimler, BMW, bigger than all of those, and they have no revenue there. It's up about 100% in the last 7 days. They have no revenue there. There's no revenue. There's nothing. I've gotten a lot of questions on this one, so I wanted to point this out. Lucid, basically the same. It's bigger than Ford, bigger than BMW, close to General Motors. They have not been through any real challenges yet, right? Think about this for a second. When Tesla was along its path to getting to where it was, how many times did we say, "Oh my God, that's it for Tesla"? They're not me, but I didn't really follow. But people say, "Oh my God, Elon Musk has lost his mind, smoking pot on Joe Rogan's show. Oh my God, Elon Musk going crazy, tweeting everybody. Oh my God, Tesla's not able to deliver, make a profit. Oh my God, this and that," right? But meanwhile, people were like, cars are cool. He's making his way. I like what he's doing. I don't have to go to a dealership. Bam, I'll buy a car, right? The cool factor is there. No one seems to mention with Rivian and Lucid, and this is an outside the box, nobody's really bringing it up there, Tesla just recently started returning more to shareholders, returning more than the cost of capital, right? We don't often look at that. I have the number somewhere. So their cost of capital. Think about this for a second. We're in a borrowing type environment. Total revenue, $6.91 billion. Costs of revenue, $2.46 billion. Remember when that wasn't the case? They would all revenues coming in at $1 billion, $500 million, whatever it was, but the cost of their total revenue was above that. Well, we don't have that with Rivian. We don't have that with Lucid. What happens if these guys have a harder time borrowing, right? Now you're going to end up moving the needle, or moving, what do they call it? The goalpost even further. So right now they can borrow money and go make their cars or whatever, and they're right in line with the cost to borrow. What happens when the cost to borrow gets out of control, right? Well, I'm glad you asked. They're just going to sell more shares. They've already admitted it. Lucid and Rivian, they will be selling more shares to raise more capital as the cost to borrow gets more expensive. That's already one of their contingency plans there. That's a tough one there. Also, remember Tesla, in the beginning, they weren't willing to go build these big factories ahead of time. Whereas Rivian and Lucid, they're like, oh God, we have to play catch up here. We have to build these massive factories. We got to expand really quick for perceived demand. Tesla had the demand. Rivian and Lucid, they have some demand at the moment, but they don't have that big demand there. They're forced to invest heavily. They're forced to invest fast there. Also, Tesla skipped dealerships, right? That was a big deal. They had to sort of break the mold in that respect there. They could do that because of the cool factor. You could go online with your credit card and reserve a Tesla, coming up with that stuff. Then you could lease a Tesla. Right? All this stuff they figured out by sort of paving the way for these guys. Do they have that same impact? Are they going to be able to do the same thing there? No dealerships, higher margins, right? There's a lot to think about here, and I sort of get scatterbrained with it, but the bottom line is these guys have yet to go through any trouble. Do you know who the CEO is? Do you know who the leadership is? Top 10 people that work there of any of these companies, right? What happens when they have trouble? All of a sudden they don't deliver, and that guy's got to go on Bloomberg or CNBC and explain himself, and you get to see that this guy's flustered and all that. Think about it, right? So there's no need to invest in it. And honestly, if you bought Rivian yesterday or the day before, you kind of deserve what's coming, right? I think Rivian makes new lows, right? I don't follow it as much, but because it's being talked about, I do. I don't follow IPOs as much, but this is going under $100, right? It's going to pull back under $100 under this, well, which really wouldn't be 100, be the opening price of the IPO, like 101, and it's going under that number. There's no reason for it to be up there. It doesn't mean they won't succeed. I wish the best for both companies, and I think Elon Musk has even said he likes the competition. Bring in Apple as well. Let's do it. But not at these prices. They don't get to just magically say, we're worth what Tesla's worth at the point where they weren't even making a profit yet, because now it's exciting and it's cool to have an electric vehicle. Okay, work yourself out there. You got to figure this out first. Anyways, enough of that. Let's move on. Something interesting happening here. Can I point something out? This may upset some of you. It's going to bother Cody. Okay, there's data, and then there's the media, right? And we all know, like, everybody's kind of like, well, the media, I don't know if they're telling, no matter what side you're on, they seem to want to push their agendas there, and that's great. Fine, you can watch whatever you like. But then the data actually shows what people are doing versus what they say they're going to do. Case in point, let's look at the Consumer Sentiment Index here. This is basically... it's a survey. They call 500 people. They ask them 50 questions. It's been around since like the 60s. So a well-respected survey as far as consumer sentiment. We look at that basically and just go, are you more optimistic about the future and lots of different things around your job and your business and all that? Or are you less optimistic about the economy, your business, and jobs? Well, right now we've been ticking lower. And to be fair, all of these are Republicans. You can break it down by political party. So the Democrats are not as optimistic, but they're still much more optimistic than Republicans. Naturally, Republicans don't have their president, and so sentiment's a little bit low for them. So nonetheless, as a whole, we have declining sentiment. So people are saying, and this is a little bit of an offshoot here, but people are saying I'm not happy with the economy. I'm worried about it. I am not excited to spend. I don't think I should make major decisions. That's essentially what's going on here. Well, they're lying. We can tell they're lying, or something else is wrong, and you're not going to like the answer, because what we do is we look at the quit rate. Let me change this out here. I'll just go 10 years or something so you can see. Actually, let's go 2001, make it really zoom out there. Okay. So this is the quit rate. So black is the quit rate, meaning the number of people that are voluntarily quitting their job. Well, these two numbers are always correlated, right? You look for them to be correlated. When there's a dissection or they become uncorrelated, they snap apart, something is wrong because people are telling you one thing, yet they're doing another, right? So in any normal circumstance, you would look at this and say, people are telling me that they're not optimistic. Well, it turns out that's probably just political, right? That's just because one side's the president and the other side doesn't like it. Okay, fine, that happens. So there's this dissection. People are not optimistic, but yet you're quitting your job? When does that ever happen, right? You would go hunker down, you'd keep your money, you would get a second job if you were really concerned about the economy. So it just shows that there's either people playing political games out there, or it could be the other, where people are voluntarily quitting their job in order to not get the vaccine. So you see that on the media as well. I don't know that that's to be true, but I know the data says we're not as optimistic, yet we're quitting our jobs and just running away. So it could be either one of those. What I wanted to point out was this dissection is the widest that it's ever been in history. You can look back to the consumer, the quit rates actually don't come out. They came out in like 99, I believe. So you look back to 1999, you'll never find it wider than this. All right, so kind of a fascinating thing to take a look at. Are you quitting your job? If you are quitting, are you optimistic about the future? Right? Think about that. That's a silly question to ask. Of course you wouldn't be optimistic. So how do you trust that survey when we're seeing what people are actively doing versus what they say they feel? So something's wrong there. I just want to point that out because there's more places we can go with that, but I wanted to see, kind of check the data on this part of the video. Do you guys watch it? Do you care? Do you comment? And if you do, we'll continue with it. If you don't, it's cool. We'll move on. Speaking of moving on, we got new highs and lows. It's a little different today. So 38 new highs, 6 new lows, but it's a little different look. Estee Lauder, I put it on a list because we own it. We held it through the last pullback. We believe in them. We like them. It's moving to new highs. Yay. All right. It's a good thing for us. The rest of these names hit new highs and are extremely overbought. That's a problem. So today's list from here is not saying, look how strong it is. It's look how extended and overbought it is. Good for them, but not going to survive in the short term here. So if you're a short-term investor, you might want to trade around your position or something. Enphase also hit the list, very overbought in the short term there. FFIV getting there, working on it. It's one of the more extended ones, so I thought I'd point that out. You got Teradyne as well. Look how extended it is. It does not like to be this extended. Just look at the last time it did it and the time before that, right? Stocks don't like to be extended from their 20 and 50-day moving averages. And then old Xilinx. You know what? It's hard to pick a top. You don't want to be the contrarian person here. You do want to be the one that owns the stock and you're like, you've gone too far. I'm going to sell some. I'm going to sell some more, right? So very extended Xilinx here. Any one little day of pullback in the semiconductors ought to drop that down. Stocks in the news, and then I'll take your questions here if you happen to have questions. So what do we have here? That list is not accurate. So that one didn't update. We got Target in the news. Well, that's earnings. And everybody's kind of focused on Target wanting to absorb inflation and not raise prices on their customers. Earnings came in better than expected. Digital sales up 30%, total transactions up 12%. If you take the annualized growth over the last 2 years for their total digital sales, that's 81% growth year over year, or annualized. So firing on all cylinders there. Prices are now starting to hurt Target, and they said, you know what, we're going to hold off a little bit longer. We're not going to raise prices with our customers here. I think that's a bad idea because retail sales just showed that you were willing to spend money, in particular online. You were willing to spend money even if prices were higher, right? The demand was still there. So I think maybe a little bit of a miss for them in terms of being able to charge a little bit more. All right, you got Baidu beats on earnings, raised their guidance up. No, revenues as expected, their guidance in line, nothing special there. The stock fell just a little bit. And by the way, Alibaba reports tomorrow, so maybe a little help coming from them. But Chinese stocks today, pretty weak. If you look at Lowe's, that one hit new highs. That's earnings as well. They beat on earnings, beat on revenue, raised their guidance, so the whole triple whammy there. They did good. Stock burst out to new highs there. Finished the day positive, but off of its highs a little bit. Pfizer, I believe they are all booster shots should be available, approved and available by Thursday, I think it was. I forget the news there, but that's part of it. TJ Maxx. Yeah, TJ Maxx was earnings as well. Same store sales up 14%. So they're doing all right. People may be less optimistic, but they're still buying some discount clothes there, right? I love it. Also, friendly thing there. I'll throw it to Cody as well, so you can chime in if you want to, because you probably already knew this. For $300, you could own a piece of the Green Bay Packers.
I did see that. Yep.
They're going to sell 300,000 shares, $300 a piece. Are you a buyer?
No, I mean, I don't know how to get involved. I wouldn't.
You just buy the shares? Yeah, $300. I did a little research on this because I was like, oh, is that a good investment? I mean, should I buy one? I'm not going to play favorites here. If there's a return to be made, why am I going to play favorites? It's not like real stock. No. So it has no value. So the 300 is arbitrary. It has no dividend. It doesn't rise in value, and you can't sell it. You can transfer it to family as an inheritance, but you can't actually sell it.
Right.
So you get a piece of paper.
You get a piece of paper, and that's cool.
And you get invited to the shareholders meeting, but you have no say.
Right. That was big over the summer. Yeah.
So why we do this?
They're diehards. You know?
We're essentially donating $300.
Right. I mean, you hit the nail right on the head.
Yeah. I don't get it. Now, no other team's done this, right? That's it, right?
Right. People like Jerry Jones have enough money. They don't need to do that.
Oh. I knew they did this in the past, but I didn't know that it was, not the case. That's right. Doc's got a good point. You sell them shares when you can, not when you have to. I'll ask the questions, and most people are like, no, yeah, I want to own the Packers. And I'm the one going, excuse me? I have a quick question, if you don't mind. Why? Anybody want to tell me why? And by the way, thanks, Doc. Put them suckers in the microwave. Took about 11, 12 seconds. Perfect. Yeah. I love it there. Let's see if I can answer some questions for you if you happen to have any. If not, I'll get on out of here. I don't mind. Yep. It's the second time? I thought it was the third time they did it, but yeah, I'm afraid I don't understand. That's it. Hey, people are switching jobs for a higher salary to fight inflation caused by the Bozo administration. Yeah, it could be the case. I saw the thing the other day that as much as 4% of the workforce is gone because of the money they made on crypto. That was impressive. I don't know if that was true or not, but I was like, all right, at some point there, maybe it makes sense. If it was the Cowboys, I'd be in. Well, it depends on, what would it come with? I mean, $300. You can't even give like nosebleed tickets to one game in the middle of like December or late November. I don't know. Hey, gold miners are perking up here. Do you think it has potential to go higher? So not only that, gold itself, right? So here is gold. Took a little bit of a break yesterday and the day before, but this building momentum here, I don't think it stops. Now, gold does not trend like oil does. If you ever studied the two, put them together, you do not get the same type of consistent trend that you do in oil, where it just every day, just a little bit more, a little bit more, a little bit more. Real hard to pick the top. Gold likes to get extended. So gold tends to shoot up and then drift back down, and shoot up and drift back down, or shoot down. Either way, it's more volatile, right? When you can see it, I don't have to explain it. So it's much harder to get a trend. Well, what's good about that is when you see it run away, you let it come back. You know the volatility is going to be there to allow you to get in. Look at all the tails around here, everywhere. But your question was on the gold miners. So if we look at the gold miners, the GDX as a whole, they're participating as well. I would say it's at a point where it's buyable on short and calm pullbacks. If you get anything that looks like this, I wouldn't be an immediate buyer, like a sharp and sort of waterfall drop. But as long as they're calm, quiet pullbacks here, I have no problem with that. I would think you have to take your shots, at least for some. Yep. Thoughts on DraftKings as far as what? The company, the stock? I'm guessing the stock broke to new lows. I think we covered this the other day. It's one of those stocks. There's a handful of them out there right now where I don't know where the bottom would come in. I don't think anybody knows where I think DraftKings is the dominant player here, and they're going to continue to fight to be. But how do we guess a bottom? We have no reason to believe 38 is the bottom, 36, 35. I don't know. It's a tough one. Yeah. Zach is correct with his stat there. I've seen that everywhere from YouTube and all those things. Yeah. Mm-hmm. Do you have any insight onto the breakout of the dollar? What that would mean for a near-term correction on risk assets? Well, it would. What it helps is those U.S.-based companies that sell overseas. There hasn't been that correlation. I thought about talking about that the other day. There just hasn't been that. Everything's doing good together. So the breakout in the dollar really hasn't impacted your small cap stocks, your sort of domestic but selling international stocks. Just hasn't done it yet. So there's no reason to sound any kind of alarm there. Mm-hmm. Hey, if you're starting with a new and small account just now, what sector you will look into because it has more value yet? I'm not sure I understand that one, but you're saying, all right, gun to your head, you've got a small account, you've only got to pick one sector. For me, I'd be excited about the pullback in oil right now. If it's a general question, I don't know the answer to that one, but if I had one choice, I would look at energy right now. Mm-hmm. Yep, IBM's hitting support, falling sharply. Well, it's got to be one or the other, right? It's hitting support, should be stopping there, right? So at least this one you can see prior lows within the last year, right? So it's okay. This has, let's see if I can make it bigger. It has the feeling of wanting to give you that flush out first. Why? Now I say that because look at the last couple days. It has attempted to put in a bottom over the last couple days. At one point over the last 1, 2, 3, 4, 5, 6, if I counted right. At one point over the last 6 days, every one of these candles were green, meaning it looked like it was a bottom for some moment in time throughout the day. But yet it sold off and went lower, sold off and went lower, sold off every time, leaving all these tails behind. That tends to create more scared bulls that will say, darn it, I didn't get the bottom. I'm going to sell and get out. Darn it, I didn't get the bottom. I'm going to sell and get out. More and more people start saying that. Well, everybody's got a number, and at some point they flush themselves out. I would look for that. That's a long way of answering that, but I hope it helps. Mm-hmm. VSCO up after hours. Nice. Yeah. What are we looking at Robinhood stock? Help me out there. Do you like it? Do you love it? What's going on with it that you want to talk about? Robinhood making new lows. Do you want it to make new lows? Do you want to buy it? Help me there. With all the hype, FOMO going around, new IPOs and EVs, how can one sensibly invest without getting left behind? You don't feel like you have to chase stuff, right? Think of Buffett, right? You think Warren Buffett chases this stuff? No. Let everybody go mess around. That's the definition of gambling, by the way. People that bought this stinking Rivian stock and Lucid on the pop and everything, that's the definition of gambling. There's no single reason to buy the stock at those prices over the last couple of days. Just gambling. That's the random retail trader that then gets a sour taste in their mouth because they chase something. And every time I buy something, it falls. It's because you're buying just based if someone says, oh my God, it's going up, you got to buy it. No. There's no possible way that those stocks are worth those prices. So it's, like I said, I'm not bashing them. I want them to do well in the long term. I like the competition, but no, they're not worth that. There are going to be some seriously hurt people on those stocks, and they are gambling, hands down. Just ask them. You think I should buy a Rivian here? You think that's a buy? If they go, oh my God, it's to the moon, diamond hands, all this happy stuff. Go, all right. What's the name of the CEO? What's this guy do? Where'd he come from? Is he smart? Right? I happen to know that the top 12 people are beyond brainiac. I mean, incredibly smart management. But just be like, hey, tell me, how many cars do they make? What kind of cars do they make? Have they sold one yet? Have you seen one? Right? Think about that. Just simple questions. All right, I'm going to wrap it up there. Get back to my toasty gummies here. You guys enjoy the rest of your day. We'll be back tomorrow, of course, to do this all over again. And I'll see you then. I appreciate you watching. Hit the subscribe button. And again, thanks to whoever's watching those videos out there, because it seems like a lot of positive response in our analytics there. So I appreciate that. And we will see you tomorrow.